correction. But let's wait and watch. And I feel what the street would be watching for is the UP outcome and the Bengal outcome. If the BJP is able to make serious inroad into Bengal, then it will be taken really very positively by the street.
Well, the pre-open rate's about to kick in, and of course they'll be just incidental really, but keep in mind I think all over the place, so no real merit in marking that pre-open number per se, but we'll do that at 280 for the NDA. At least the markets leave a sigh of relief that there is seemingly political country. But as Tamanna said, viewers, these numbers will change. In all probability, yes, the numbers will move up, but these numbers will change. So keep that at the back of your mind.
What is fairly clear now that you are going to have a third term for the NDA government, because you've crossed 272 and the leads are out on 477 out of 543 seats. So that seems pretty much in the bag. Now the final number of where it lands up remains to be seen, and then of course within that what is the BJP number. But from the distance from leads to votes or leads to results is sometimes a long one.
Yes.
Because remember, at any point the officials of political parties can come in and hold up that process, in the sense say that we want to make sure it's done well and properly. But in terms of the question mark of whether you're going to see a Modi 3.0, that seems fairly in the bag as of this moment. We'll of course have to wait and see where those numbers solidify.
Yeah, the only point is at 280 or let's say 300, will the street be too disappointed or no, is the question. So Gurmeet, my final question to you really, assuming that the markets give a corrective move today, if they do, I do not know that, but if they do, would you, and assuming that we have a policy continuity, but with a lower majority, if that is the case, I'm building out a hypothesis here, is that an opportunity, depending on what levels, is it an opportunity to invest? And what is that opportunity? Is it 3% lower, 5% lower, 10% lower?
So there is any correction, I think our stance has been buy on dip. So if it comes, it's welcome, because, there are two things you have to in a portfolio. Look at near-term moves for income generation or create generational wealth, because you are in a long-term bull cycle. I'm in the latter camp. Even if you see from 2014, look at the way, the solar capacity was ramped up by 25, 30 times. See the number of, electrification done, the money allocated to. So actually, if you see solar panel companies, energy companies going up 4, 5x, you see the spend which has happened over the last 7, 8 years from a policy point of view. If you see railway stocks doing well, see the metro coverage for, of leading cities in India. It's almost 3x now. See the number of Vande Bharat trains if you want to track Titagarh or Jupiter. So I think, from my point of view, I think we are in a capex cycle. We discussed that, the gross capital fixed formation is now 30% of GDP, which is nothing but the fixed assets government, businesses and households are creating. And I think I would look at more policy announcements, what the government wants to do over 5 years on different areas, whether it is water, whether it is energy, whether it is, the infra work. And I will then position myself for, longer cycle. Near-term hiccups, most welcome. I mean, it's a good opportunity. As long as the, BJP, as, Aditya also said, on its own, if it crosses 272, it doesn't matter beyond 1 or 2 years here.
Rajat, while I do take your point that it's sometimes wise to take profits off the table and not be greedy when you're a trader, at least in a situation such as this. But if intraday you get a level of hypothetical again, close to 22,800, 22,900, let's extend the timeline. Let's talk about 27 June expiry. Would you consider initiating fresh longs at that dip? So 3 to 5% correction between today and the next few days becomes a long trade for the month?
Taking a long trade for the month, I'm slightly apprehensive, because as I said, that this has been a huge run. So even for a correction, if you are thinking of taking a long trade and it is the beginning, it's the early part, not even the first week has gone. So there is likely to be some profit taking. See, one thing, if you look at 2019, after here, what they achieved, what at that point of time, the market or the Nifty achieved the kind of rise, it has done it on one day. Last time there had been a upswing, say about a couple of weeks, and after that a major correction happened. And I have told you people earlier also that the elections, definitely there is policy continuity, all that will happen, because NDA is coming back in whatever manner of that. But what actually would decide is if the Fed funds rate is increased. You will see, if you check history, you will notice that that's a bearish signal. So I'm actually apprehensive of that. That can happen. That if Fed cuts rate, that means that is an admission by the Fed that American economy is going into recession. So our elections, the effect will be over more or less by tomorrow. More or less by tomorrow. And after that, you are looking at that on the one side, that is the Fed stance, and the other thing is the union budget. And if you have to discount union budget, my experience tells me that you take at least 10-15 days, and after that the budget rally builds up. So immediately going for a long trade for the month, at least I'm not comfortable.
Got it. Okay, Gurmeet, Rajat, really appreciate you taking the time out and the sane advice. Thanks so much, both of you, for giving us your thoughts. Now, let's just very quickly, it's 9:05 already. Let's just take a dipstick into what the key numbers at some of the places are. Tamanna.
So on top of the hour, till we have a clear picture, we will be doing this update for you, giving you a sense of what the numbers are looking like. So as of now, here is the all India picture, 283 leads for the NDA. Remember, these are leads, not results yet. Only 486 of 543 leads are available to us. So you're still about 60 odd seats to go. 283. So as per this, the NDA has already crossed the halfway mark. You are looking at a third term for the Modi government if these leads convert to seats and the final results. For the India Alliance at 185 seats. Now, I want to go into some of the states and what the picture is appearing, at least the key states, and we've picked 3 or 4. Let's start with Uttar Pradesh, of course, the big one, with 80 seats and a contribution of 80 seats to the Lok Sabha. Here you are showing the NDA. We're seeing the NDA at 37 leads and the India Alliance at 30 leads. Now, if this converts into the final result, it will be a big boost for the India Alliance, because the NDA by itself even with allies, the BJP plus allies have had a dominant control of Uttar Pradesh in the last 2 elections. They had 64 seats in all in 2019. So we'll have to see if we come to that tally. Let me come to Maharashtra. Maharashtra was the joker in the pack, in the sense no one was very clear where it would go and which side it would go. There was so much of political excitement over the last 5 years. Here, leads are showing India Alliance in the lead at 25 of the 43 counted so far, and the NDA at 18. I want to then come to some of the other key states where the NDA is expected to make inroads, and let me pull up West Bengal. And this is something that the market will be watching very closely, because the question is that after 2 terms of being completely on top in a large part of northern and western India, can the NDA make headway in new areas like the east and the south? So in West Bengal, 21 leads. If those convert to seats, it will be astonishing completely for the NDA to go into a territory with such strength that they haven't in the past. Of course, like we've been saying so far, we'll wait for all of these numbers to settle. I'm just going to pull up Andhra and Odisha, which is the reason is that both also have assembly elections going on, and there have been very different moves over here politically that the NDA has adopted. 15 out of 17 leads going to the NDA right now. Remember, they tied up with Chandrababu Naidu, and whether you could make a southern foray or not for the BJP was the question. If this converts into the final results in Andhra, it will definitely be spectacular for the NDA. Let me just get Odisha. They fought against Naveen Patnaik, the Biju Janata Dal. The question is, would they be wiped out? It's seeming like perhaps they will. 12 leads for the NDA out of 15. Remember, this is a place where they haven't been able to make a mark at all. So if they've now gone into Odisha, increased in West Bengal, and completely had huge strength in Andhra, does it make up for any losses possibly in Uttar Pradesh and Maharashtra? That's what the next few hours are going to show.
We'll keep coming back with more of those updates. Stamina will, of course, decode that on the hour. But we're gearing up for market opening. It's all over the place from the look of it. The Nifty is indicating to a flat to slightly lower start from what we are picking up on. Rahul Arora now joins in with his view on the markets and elections. Rahul, good morning. the outcome, at least from what we are seeing, those early ticks is not reflecting or resembling the exit poll that we saw yesterday. Nifty, after a 3% up move, is indicating to a flat start. What is your portfolio stand? One thing, a given, is that the NDA is going to come in. But what does that mean if they don't come in with the sort of majority the street would have liked?
Good morning, Samina, and thank you for having me on the show. So the way we've been doing it is over the weekend, since the exit polls came in, we've sort of been advising our clients to take profits off post yesterday's up move. This result seems to be completely in contrast to what the market was expecting. I think if I take you back to 2019, the NDA won about 353 seats, of which the BJP had won about 303. The 50 were allies. And when I sat down for this interview about 10 minutes back, just about 30 leads were left to calculate. And the NDA was showing as about 300. Even if you theoretically assume that they win all 30, that ends up at about 330. And if the allies hold, there you're talking about the BJP being somewhere around 275, 280. I don't think the market is going to take too kindly to that, because the exit polls showed up something completely different. Obviously, the question will be if this lands up being, it will be an NDA-led government. There is no question about that. But if you do have a situation where the BJP ends up at about 270, 280, it does make it a slightly weaker proposition from a policy standpoint, because you'll get that much more reliant on your allies. So I think the street was working with a clear 300, 320 for the BJP, and maybe 50, 60 from the allies. This has turned out to be a bit of an antithesis. So I wouldn't be surprised if the market gives up a fair portion of the gains from yesterday. Now, how do you play it from here? I have no idea, to be very honest, because the only good thing that I can think of in recent memory is that the FMCG companies have given up, very positive commentary on rural recovery, and India is heading into rate cuts. Now, in the backdrop of that, how do you present a budget when the mandate is not as strong as you expected? Remains to be seen. I'm not going to say go in and buy the dip, because it's been such a ferocious rally. You may want it to settle out a little bit towards the end of this week and wait. But I think the first tick from a market standpoint is a bit disappointing. But the only thing, Samina, that's worked for us overnight is that crude is down, and down dramatically. And I think from an India macro story, regardless of who's in power, the fact that crude is hovering around 75, 80, whichever government, whichever form takes shape, that's a huge positive. So a bit disconcerting from a market standpoint on current evidence, but let's see what the final numbers add up.
Rahul, 2.5 minutes left to open, but if you are asking your clients to take money off the table, where is it that you turn constructive again? At what levels?
Well, Neeraj, see, like I said, if from the looks of it, as it stands right now, even if it is a BJP-led government, it's going to be a very slender majority. It's not going to be an absolute majority. You're talking about 280, 290 seats. I don't know, Neeraj. I think maybe this drops down to about 20,000 on the Nifty, 21,000. Maybe you can start buying it there. But, don't try and catch a falling knife today. I think let's wait for the final numbers. It's possible that these leads are, going in the opposite direction. Maybe the NDA numbers actually get bumped up and the initial leads, are a bit haywire, because these are leads. These are not actual numbers. So I think if this was to pan out against market expectations, Neeraj, you probably want to go back to IT, FMCG, pharma for the short term. I think, you probably want to take a little bit of a backseat, because I think the trade was very simple, Neeraj. If it was an absolute majority NDA government, then you want to play manufacturing, you want to play, anything related to chemicals, indigenization, anything that was announced around the PLI schemes, defense exports. I think that was the theme. But if that, if it looks like you're going to be dependent on allies to push through reforms, then you're probably in the short term. And Neeraj, let's just go back 3 weeks, right? The point I was making with Samina, the best commentary of this result season has been FMCG. So if you have a good monsoon to top that over and rate cuts and more money in the hands of consumer, I think defenses in the short term may not be a bad place to hide.
All right, Rahul, just about a minute left, and before we go into that pre-open, very, very quickly, if the number does not come as per what the street wants, would you be looking at booking profits today or just sitting tight?
So, Tamanna, let's get one thing clear. I think even if the BJP manages to get 270, even if they get a one-seat majority, 273, I think it's a remarkable performance by the Prime Minister in a third sitting term. It is a phenomenal achievement. Let's not take anything away from that.
I'm going to just stop you there. I want to hear that full answer, but going across to Neeraj just for the first opening rates.
Yep. Well, we'll actually take that, because it's 40 seconds left for the markets to kickstart trade on what was perceived to be a slam dunk from the incumbent party. For now, it is the NDA which is likely coming back to power. The only question is the markets right now are grappling with the uncertainty of what the overall lead would be, not just for the NDA, but the BJP individually. And I think, therefore, this makes the next 1.5 hours that much more interesting, a bit of toggle between the gainers and the losers. So from a market perspective, not bad. But let's wait and watch what the end result will be. The first rates will come up on your screen. And let's wait and watch if indeed some of the high flyers of yesterday are taking a bit of a pullback or no. Just quick 30 seconds really of the market check, because this will change very, very dramatically. For now, about 1% lower. Let's see if this changes. Let's just get the heat map up, because I'm sure the mid caps and small caps are also down. Just let's show some of those individual stocks. A deep gash of red actually, because we are now down about 1.5% already. We're talking about giving up some of the gains that we did yesterday, and that's precisely what's happening, because we are now down 2%. The Adani twins leading the losses, then the PSUs following suit, L&T down about 4%. I must warn you that this picture too could change. But for now, the market seems to have made up its mind that it is not in a mood to reward stocks the way it was rewarding it yesterday. Tamanna.
Absolutely. I think till the numbers are clear, that's probably what is going to happen. And even as I go through all of the stocks today and what is not working, simply put, everything that was up yesterday is down today. If I had to give you the short story, so RVNL down 7%, 7.5%, NHPC, Bharat Dynamic, SJVN, that entire pack taking a knock. Among other things, the broader markets as well, if you pull up the small cap and the mid cap indices, seeing quite a bout of weakness. Now, before I give it to Samina for individual stocks, let me just take a second to explain what really is happening in the counting process and what are the numbers that you should look out for. Now, very clearly, there are several rounds of countings that take place. So, which are you would be seeing different numbers on different television screens right now and wondering what really is happening. The final number, the one that matters, is on the Election Commission website. So let me just put it out there. Now, out of the 504 leads that we have on the NDTV network, out of 543, you have leads for NDA at 276. Remember, the leads convert to a final result, win or lose, for every candidate after all rounds are complete. Now, each round is about 14 EVMs taken to a central hall. The votes from those are counted, written on a blackboard, notified, and then the rest, the next round begins. Now, out of every 5 assembly constituencies in a parliamentary constituency, you will have a VVPAT tally as well. That means that slip that fell in when you voted, and I assume all of you voted, will be verified by the officer in 5 random assembly seats. Once all of that process ends, a lead converts into a result. So you will have to wait and see what the actual final number is. Now, in some seats where there is a large population, you will have obviously more EVMs, more rounds, and a longer time for a lead to convert into a final win or a lose. So I would say right now, no matter what you are hoping the result is, hold your horses, because what you are seeing are initial leads. Now, right from the start, right from the get-go, we have been saying that you may see us as more conservative than other screens right now on what the final numbers are. That's fine, because we'd rather get it right. This is a very, very important function that we are performing today, and those are the numbers that we want to say. Now that I'm done with that bit, the fact is that the markets are reacting not very positively, Samina, to what the numbers are on the screen right now.
No, and it's no surprises, right? I mean, this is as expected, really. From this morning, there's been a little bit of nervousness, very contrary to what we saw on the scene yesterday. It was buying the rumors, sell the news, and we talked about this extensively yesterday as well. It is looking a little nervous, and that is a given. We're sub 23,000 on the index. The breadth of the market's also quite weak. Nifty Next 50 is down 2.5%, and the broader markets, for a change, are not doing as badly as the benchmark itself. So the Nifty 50, amongst all the stocks, 49 counters are trading lower. You've only got one sole gainer in terms of trade. Well, if you want me to highlight the losers, that might be a little heartbreaking, so I'll just take you through a few gainers in the broader market universe this morning. Sapphire Foods is up 5.5%, so that one looks okay. Sundaram Finance is up 3%. Marico is up 3%. Macrotech, Blue Star, Colgate, very, very industry agnostic in terms of movers today. HUL, defensives are doing well actually. HUL, Nestle, Sapphire are all from the FMCG pack having a positive start. Coforge is trading flat. On the sell side, we've already highlighted a few for you. The Adani stocks are trading weaker. Banks are leading the way in today's losses. Cement counters are weak. Railways are trading slower. OMCs are also seeing a bit of selling pressure that's emerging. So it's really what everything gained in yesterday's trade is pretty much giving back all those gains as we see it right now. Kush, you want to come on this sub 23,000? What are you doing? Intraday trade very quickly.
Well, we'll wait and watch. I mean, not too far, right, for the final count. And the market, although recovered, I mean, it's still deep in the red. Perhaps a wait and watch at the moment. Just see, if we cross 300, perhaps 310 as well. I think the markets will take that as a reason to cheer. But, would you go long at the moment? I think I'll, perhaps wait and watch. For sure, the numbers are lesser than what was expected. But the fact that, if the NDA can come in, or rather the BJP can come in as close as they can to 270, I think that also could be, an opportunity to buy. For now, just wait and watch.
All right, quick word from Rahul. Rahul, I ended up cutting you because we were going into the pre-open trade. So I just wanted to, see the opening rates. So sorry about that, but to complete, you were making a very important point that even if the BJP gets 273, it would be an astonishing achievement. And, I agree with you there because the bar has been set so high, admittedly, by the BJP itself. And maybe that was part of the election strategy, where no one was even talking about, would you, have the constitutional requirement of crossing the halfway mark by yourself. But the point that you were making was an important one. Do continue.
So, Tamanna, they say sometimes a second is a lifetime during an election cycle. Between when we spoke 10 minutes back and now, I was looking at the numbers on your channel, and there are just about 30 seats left to go with the NDA at about 280. I don't know. I really don't know. So much has changed in the last 7-8 minutes, and it's becoming a little tricky. My heart is beating a little higher because, we derive our income from bull markets, and we were hoping for a different result, and I'll be extremely honest about that. I mean, it doesn't, with 30 seats to go, even if you assume the BJP or the NDA lets 50% of that, you're talking about a number of about 295, 300. You're clearly talking about a BJP minority government here. I don't think they're going to make the halfway mark if these numbers are going to happen. That's a bit of a disappointment from the market standpoint. That's not to talk about my political affiliation in any way, but I think so much was being built in terms of this election outcome. And like I said, I think, had the Prime Minister managed to get even a 1-seat majority, I think it would be a remarkable statement of his stature and what he has delivered for the country in the last 10 years. But, Tamanna, just keep an eye on the difference in the seats between the NDA and the others combined. Let's not take anything for granted here. It is a democracy, and you don't know how things will eventually function. Allies can stay allies, allies can drift off, but just keep an eye on the difference. And while the Nifty is down, and rightly so right now by about 500, 600 points, like I was telling Neeraj a little earlier, don't be surprised if the NDS lands up around 300, 310, that this drifts down to about 20,000 by the end of the week. Don't try and catch a falling knife. My humble request to all your viewers, these are retail investors who are putting their hard-earned money through SIPs in the market. Do not try and catch a falling knife. India is still in a very good place, regardless of the government that comes in. Like I said, crude is in a very sweet spot. Your rupee is stable. Your external sector is looking good. Rate cuts are on the anvil. Rural recovery is looking up. There are things that are going right for India. And whichever way, shape, or form the government takes, this will be a buy on dips market on India, but do not try and catch the bottom on a day like this. Just like you cannot catch the top to sell a stock, this is the best advice I can give in my 25 years of tracking the markets. Do not try and think you're smarter than the market by catching a falling knife. You're down 600, you may think you've caught the bottom. What if you're down 1,000 by the end of the day? Wait it out. It's your hard-earned money.
Wow, that's the kind of advice we need. Wait it out. It's your hard-earned money, and it is not Satta Bazaar, to say the least. Rahul, just one point. Completely take your point. We've been anticipating a price or a time correction for quite some time now. Various reasons have come and gone. Markets have held out. FIs were almost negative on India for the last few months, citing China, citing valuations. if we do go into a correction mode, which may be likely and may be good actually for some who are waiting to sort of get in at a good price, if that, do you think a 15-20% correction from here cannot be ruled out, and that may be a good entry point? I know staggered investing is the right way to do it, but 15-20% from these levels potentially could be a given?
So that's the point I made earlier, right, Samina? Because when we started this morning, the Nifty was anyway at about 23.5. And like I was telling Neeraj earlier, I wouldn't be surprised if it dropped down to 20. That's about a 15% correction. See, Samina, let's not forget the fact that there are some very important state elections coming up. The state that you and I sit in currently, Maharashtra, goes to elections in about 4 to 5 months. This is one of the states on current evidence that's hurt the BJP in this election. West Bengal goes up for elections, I think, in the next year or two. So there are a lot of important state elections in the next 6 months to 2 years. In that backdrop, what sort of a budget does the Prime Minister choose to present when he does so next month or early August? I think that's going to be very critical. The only concern I have is the one thing the Prime Minister has shied away from over the last 10 years is being populist. He has spoken a lot about Atmanirbharta, cutting down subsidies, making people more self-reliant. Will this force his hand to become populist, which then puts into doubt your fiscal deficit numbers? That is the only concern I have, because you have such important state elections coming up. No one will talk to you about this right now because it's going to be a day headlined by national elections. But keep this at the back of your mind, because this is going to be the single most important determining factor on what the union budget is going to be like. You are going to want to rebuild in the states where you lost ground. And let's not forget, Samina, one of the biggest states, and just, I'm looking at the graphics on your channel, one of the biggest states that's hurt the BJP is Uttar Pradesh. This is remarkable. In the Hindi heartland, you had so much going for you, and you've lost so much ground in Uttar Pradesh, where you are actually coming in second, and this after opening the temple. So, I mean, it just goes to show you how much will probably we have to done on the ground to recoup sentiment. I mean, I was talking to V-Mart Retail, and, you should talk to Lalitji of V-Mart Retail, and he'll give you a sense of what's happening in UP Bihar, because 70% of their revenues come from these two states. There was a fair amount of rural distress post-COVID. It was just about starting to look up. And in that backdrop, if you have this sort of a verdict. So keep in mind, I think the next critical thing will be the budget. I just hope there is, they keep that tilt on fiscal deficit and they don't slip. But, if I was in his place, I'd be tempted to try the populist hand.
Rahul, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time this morning. That's the view from Rahul Arora of Nirmal Bang. Let's get in a global view. Mark Matthews, Head of Research Asia at Julius Baer, Johnson right now with his thoughts. Mark, great having you. Thanks for taking the time out and being with us. What's your sense, Mark? We're still in the leads phase, so the results are not clear as yet. As of now, the leads that we have point to a 282 for the NDA, not for the BJP. A bit of an antithesis from what the exit polls were suggesting. What's your view on India, therefore, as things stand?
Well, doesn't that still give them majority, 282? You'll have to tell me.
Yes, at 282, the NDA gets the majority, yes.
So I'm not surprised. I'm not panicking or anything like that. I think that's clearly lower than what some pollsters had estimated, but enough to give the majority and a continuation of the pro-market policies that we've had for the last two administrations. Don't know if I have much to add apart from that. I don't think it's bad.
So, Mark, here's the question. A lot of local people, of course, look at the quantum of leads that were built and whether that has come out and try and form the view accordingly. For somebody who's looking at it from a global perspective, if the number is not as strong as the last time, but it still gives the government a chance to return to power, for you, the continuation of the government, even with a lower majority, is that present continuous, or would you believe that that's a bit of a sign of nervousness for the markets?
No, I think it's a sign of continuity. I think, possibly it shows that the government has lost some edge with voters who voted the last time, but not enough to make the reforms go away. And there was another election, yesterday on the opposite side of the world, in Mexico, actually, where there was also a populist government that was elected, re-elected actually, but they're leftists, and so the market there in Mexico went down. So I think it's an interesting contrast because I think that investors clearly like pro-market government like the one you have in India, and they don't like left-wing governments like the one they have in Mexico. And I think share prices will continue to reflect that. Beyond government, I'd simply say that it's clear, looking at the performance of India relative to the rest of the emerging markets, and not only over the last 14 years, but you could go back 20, 30 years, that India has a performance that almost no other emerging markets have. And I attribute that really to the ability of Indian companies to return value to shareholders. And unfortunately, the emerging market complex, although its economic growth is very strong, they don't seem to be able to translate that into the bottom line. And that explains the massive underperformance of the emerging market asset class over developed markets over the last 10, 15 years. But what I want to say is that India is the exception to that. And I think it, partially is due to the reforms of the last few years, but beyond that, it's also because for some reason, Indian companies do create value for shareholders, and that's fairly unique in the emerging space.
Very quick question, Mark. So I'm assuming that your stance doesn't change on India, even though the ruling party doesn't come in with a landslide victory. Would you at this stage, keeping all the other macros in mind, politics in India, globally, of course, competition, a good growth, India's inclusion in JPM, would you, what is your stance on India in terms of new money coming in? Would you still be overweight India? And if yes, what are the 2 to 3 themes that you would still buy into in the country?
Well, the short answer is yes. And I noticed on Friday last week that the New York Times published an article titled "Wall Street Lands on India Looking for Profits It Can't Find in China." If you read the article, which is online, there's hardly any reference to this election, actually. It's talking about the economy and companies and, the kind of things you were just mentioning. And so if the New York Times is emblematic of a sort of, foreign view, I think the view on India is basically that this is a big, open democratic country with a big economy, a young population that has a lot of room for growth in front of it and a history of returning value to shareholders. That story is absolutely unchanged. And so I think that the themes that we liked, yesterday are the themes we still like today. Those would include things like the real estate sector, where the middle class is growing and there's going to be more demand for building materials and furniture and whatnot. The power sector, where demand is clearly in excess of supply, and all sorts of things. The banks, it goes without saying, are the heart of any economy. Consumer.
Mark, so Tamanna here, and I know we asked you about the numbers on the screen, which are still firming up. So we still have leads. They have to convert into final results. As of now, our numbers are showing 291 for the NDA, but that means that not necessarily yet for the BJP. We have some streets to go. Now, why am I asking you all of this? The big factor for the domestic markets is whether BJP by itself, not the NDA alliance, the BJP by itself forms or crosses a simple majority of 272. I'm trying to understand from the FII view, from the global view, how important is that you have stability, policy continuity with Prime Minister Modi's party in complete control. Does all of that matter from a global view?
I think the part that people were looking forward to was the idea that with that party majority, there would be land, labor, and judiciary reform. And so if that doesn't end up happening, how much of that is in the price, I can't say. But to your earlier participants' comment, if there is a pullback, it's a buying opportunity. I don't see why India would turn into a bear market. I simply don't see the conditions for that at all.
Great chatting with you. We'll hopefully come back and have a more detailed conversation next week when the tide settles. In the meantime, a quick check on how the markets are holding up or holding down. The VIX has also jumped significantly, actually. You would imagine that as we get closer into today, you would see a little bit of cooling off on the VIX. But because the outcome is looking so different from what the markets had factored in yesterday, the VIX is up about 20%, 25.3. This is the highest it's been in this season, to say the least. The Nifty as well, if we can pull that one up, see what's going on. The breadth is quite weak. The Nifty itself is down nearly 3%, so 680 points. We'd almost given up pretty much everything, barring a few points here and there, in terms of what we gained yesterday. Intraday high yesterday was 23,338. Today's intraday low was closer to 22,500, attempting a little bit of a recovery, but of course it is going to be very, very volatile with a very clear negative bias from what we see. Bank Nifty is weak, Adani stocks are selling off, PSU is leading the way down in today's trade. But we have Mihika, who's at the dealing room where the other place, apart from a newsroom, where the action is. She's in conversation with MK's global head, Nirav Seth, who's joining us live from the dealing room. Take it away, Mihika.
Yes, good morning, Samina. So yes, I am with Mr. Nirav Seth, the CEO of Institutional Equities at MK Global Financial Services. Mr. Seth, my first question to you is, what's the sentiment among your clients right now?
Well, you can look at my team, this is hustling and bustling, and you can see they are quite quiet. So this is obviously, from what we were expecting, this seems to be a disappointment. And if BJP runs short of an absolute majority, even though NDA comes with a majority, market will reassess the entire trajectory of the policy and how we want to look at budget and the introspection in terms of what the government wants to do, because this is a shocker, if nothing else, probably coming from the worst possible scenario. From what we hear right now, that even Mr. PM Modi seems to be trailing in Varanasi. So obviously, this is a big disconnect.
Yes. And what kind of sectors are your clients interested in buying in right now?
Well, there's a big sea change in terms of what was there yesterday and what is there right now, right? So the whole idea was that you're going to reset the infrastructure level, you want to reset the investment to GDP ratio. If you look at the last 3 years, probably the first time since India's independence that your capital expenditure was higher than revenue expenditure. The question is that you've not been able to sell this politically to your constituents, right? So, the whole thing you will do reassess in terms of, what kind of cabinet you are forming, what kind of policy direction you are taking. But those things are different. First, I would believe that given the kind of run-up that you've seen in the markets, there could be a sizable sell-off if BJP doesn't get an absolute majority on its own.
And in terms of sectors, are there any sectors that do stand out?
Well, right now, so, in one of the interviews I said yesterday that, it is about alpha. It's about beta, sorry, not about alpha. The question is that whether you want to buy Indian equity assets or not, right? Today, after the dislocation, assuming that, NDA doesn't come in absolute majority, we need to reassess that at least till that time that valuations come back to a mean reversion.
And, when you talk about the differential in valuations, what is the differentiation in valuations between the large and the small caps?
Well, I'm not talking so much about the large and the small caps. The small caps are growing faster and therefore they are priced at a premium. But all this is contingent upon the fact that you can see 5 years out, 10 years out, your valuations eventually are a function of longevity of the earnings. Like I said, eventually if you look at the history long enough, these things don't necessarily matter, right? But the fact of the matter is that there was so much built up in anticipation for all of us, right? Because we believe that, India has gone to a stage where economics has started driving politics. And I don't think that, you've ever seen the PM not ever getting a majority. Right, from that time he was chief minister in Gujarat. So assuming, again, I'm coming back to the same question, that if you assume that BJP doesn't come back on its own in absolute majority, a lot of questions will be raised.
And, so far we've seen FIIs selling, but given we have government stability and the FIIs do start coming in, do you expect more large funds towards the large caps?
Yeah, that was our expectation. So assuming that, you don't have any change in political establishment and the story continues, then I was forcing a very, very strong surge in FI inflows.
Okay. And given a scenario that we do see government continuity, what are your top sectors that you would like to stay invested to or buy into right now?
Well, it now depends upon whether you're coming back to power and are you coming back to power with a reasonable majority, right? So I'm saying anything above 300 is only of academic interest. I don't care about it. But you need BJP with 270, you need ND at about 300. Then I think the story continues because they will be able to figure out, right? So I don't think that the basic DNA of BJP will change in terms of how they, how they want to reset the economic growth rate of the country forward. What will change probably is the way they start communicating to people at large, right? Because they have to sell the agenda because they eventually want to get voted back to power.
Yes, okay. Thank you so much, Mr. Seth, for joining us.
Thank you. Pleasure.
That's the view from the MK Global Dealing Room. Nirav Sheth giving his thoughts. What we need to do, by the way, as we, just before we take that break, and I think this is important to lay out, that while the leads are coming in as they are, and it's NDA 293 now, those numbers, which were static for a really long time, have started inching up a bit. The Election Commission website, Tamanna, is a different piece. Just before we take that break, Tamanna, take a minute and just tell us the importance of that.
So on every election, Neeraj, and I know everyone gives leads, but at the end of the day, I always look at the Election Commission website because that's what is final. They have 392 out of 543 leads, so much slower than what any TV screen is showing you. But remember, that's the asli one. Now, as per that, the BJP is leading on 187 out of those 392. That means you are close to 50% seats of everything which has been showing leads so far is with the BJP. The INC is looking like they're going to cross their 2019 number, which was fairly dismal. It was in the 50s. And of course, we will have to wait and see because like we've been explaining that you have rounds of counting. As of now, what is seeming fairly clear is that the election result is tighter than what was expected. If it was not, you would have probably seen a very different screen by 10 o'clock. It is a closer fight. Doesn't mean we know what the outcome is so far.
God. On that point, viewers, we need to slip into a very quick break. More action on the markets and more guests on the other side. Stay tuned.
कांग्रेस पार्टी की सरकार साल का 1 लाख रुपया बैंक अकाउंट में डाल देगी।
जो मर्जी करते हैं, पावर में है, पावर इज टेम्पररी।
सबसे बड़ी कोई देशभक्ति का काम हो सकता है कि 2024 में इनको हटाओ।
All right, back with markets, and we'll stick with markets. Volatility, India VIX has inched up a little bit. Markets are a bit tense, yes, because look at that volatility index. The VIX has gone back to levels that it was on Friday. Markets have gone back to the levels that we were there on Friday. Monday almost seems like a distant memory for now. Let's see if that gets recouped, because remember, as we've been saying, as per the Election Commission website, the numbers, they're going a bit slow. they're very different than what the leads as of now being shown, even on our website, or even on our screen, by the way. As we speak,
Sorry,
they're at 297.
I wouldn't say they were very different, Neeraj. Let me just come in there. I wouldn't say they're very different in the sense they're, of course,
297 to 194, so slower, yeah.
Yeah, they're slower, but in terms of directionally, does it mean that what we're showing on our screens is incorrect? Not at all.
Not at all.
It's showing a closer fight than was expected.
Exactly, yeah. Okay, let's get in one more view from somebody who's been very constructive in India. Trin Nugent, Senior Economist of Emerging Asia at Natixis, joins us. Trin, great having you. Thanks for taking the time out. I've seen your pinned tweet, Trin, wherein you spoke about what a Modi 3.0 could mean for India from a global FII perspective. Seems that that is going to happen, albeit with a lower majority, maybe, as things stand right now. Does that make you less constructive, or you stay as constructive as you have been on India?
No, absolutely not at all. I think that Modi set himself a pretty high bar. I think if he reaches even in 2019 level, it's still quite significant, right? So the disappointment is that everyone had a very strong bar to what the outcome would be. I think what it does show is that there's still work to be done. He's made a lot of progress in cleaning up the balance sheets, but the next step, the Modi 3.0, is really about broadening out that growth, right? He's done a great job of cleaning up bank sector balance sheets, the fiscal balance sheets in terms of the quality of the spending to do more capex on infrastructure, on diversifying energy supply, such as expansion of renewable as a share of total, and more importantly, reducing the negative aspects of subsidies and adding more of what's needed. Now, on the current account, it's also quite greatly improved, particularly because goods deficit declined quite substantially. But that decline of goods deficit also mirrors a weakness, right? It mirrors a weakness of the fact that corporate sector in India, up until very recently, have deleveraged, which means that investment cycle were on the downturn, which has an impact on jobs, right? Service sector in India continues to outperform and continue to be a key driver of growth, but the manufacturer continues to be quite weak. So we think that in the next stage, we need to include everyone on board. Much of the job growth has been on the high skilled IT, businesses, services, and so on and so forth. The next, and even in manufacturing, it's really the ICT export that's excelling, right? Whereas we need the labor intensive, the job growth, the broadening out from fiscal investment, which has helped sectors like energy and infra, to other sectors, to other firms. And I think that is what the polls and the results are showing. It shows that Modi has done a good job and likely to be able to form the government, but he still needs to continue to do his work. And there is a lot more to be done in India, particularly regarding the manufacturing sector, particularly regarding the broadening out of growth, and especially including manufacturing, not just high tech, but labor intensive, because we have a very large share of the population still employed in the agriculture sector. And for us, we need to be able to move these farmers into factories, providing them with higher productivity jobs to really include them in this growth story.
Absolutely. Trin, great to speak with you. Tamanna here. And even as we wait to see what the final numbers are looking like, I was keen to know your view on what you'd like to see from the next government in the next 5 years. We've been talking about the China plus factor and India's lead in manufacturing. We're moving forward on our PLI schemes on semiconductor. We hope to be at the forefront of all things AI. What are the key things that you are looking out for?
Right, India is actually, if you look at India penetration into large tech companies, quite good. As I mentioned, it's done a good job at absorbing and formalizing the high skill sector in India, right? That's lead to an increase of formalization of jobs, but it's still 10% of total roughly. So what I am looking for is to really move this further, right? The sectors have done well, have been infrastructure, energy. We need to broaden this further. We need to broaden the easing of liquidity conditions, right? So what I'm looking for is reforms that are necessary to do so. Labor market reforms, for example, progress has been made in not raising the number of people that need government approval to be fired from 100 to 300. But we need to unshackle this further, because if you want to attract labor-intensive manufacturing and large-scale employment, we need to remove a lot of these hurdles. And it's not just about building physical infrastructure. We also need to work on the soft infrastructure. And this is where I think the Modi 3.0 would need to be headed, so that India is firing on all cylinders, not just the service sector and the pharma and the ICT sector.
Well, just a quick question on what you're making of the recent developments, which are beyond politics, right? And I want a view from you on Indian paper, because that's again an important talking point for a global investor or anybody looking at India from the outside. We had GDP growth that came in much higher than the street was expecting locally and globally. Apart from that, you've had an S&P upgrade in terms of the outlook. Sure, we've not got a rating upgrade yet, but that's only a matter of time. JPM inclusion, we've talked about this extensively for the last couple of months, just goes to show you how excited we are about all this. Keeping all that in mind, can you draw a parallel for us between economy and real India, real earnings, India Inc.? How does that stack up? And also, do you have an outlook on Indian paper? Does that still look attractive to you at this stage?
Well, I think for India sovereign, the govies, I think the move is upward, right? In terms of, as you mentioned, the sovereign upgrade. They've done significant reforms. I think fiscal consolidation would need to be further. So one of the things that I think the Modi government has done well is really improving the quality of its fiscal, right? Expenditure has gotten better, and that includes more capex and what's really needed versus just a lot of subsidies. Now, revenue is also increased, but it's still large. So I think what we need to do is further consolidation of this, right? So that's the point. The second is that the foreign participation, not just through the passive flows, as long as India continues to make improvements on its fiscal, which we think in the future we need to include more direct taxation. And if India wants to grow manufacturing, this import and excise part of the tax revenue equation will need to decline over the longer term, then I think upgrades are very likely. And when we talk about broadening, I think a key metric you should consider is India GDP per capita. What a lot of people focus on is PPP, which is purchasing power parity. But if you look at the absolute number and you compare it to countries with benchmarks such as Indonesia, Vietnam, and so on and so forth, Vietnam actually has a lower rating. India GDP per capita is still only 2,500, despite rising by 64% over the past decade, which means it has improved, but there's still a lot of room for broadening of that. So in other words, I think that my outlook is quite constructive. I think it will continue to have positives in terms of rating upgrades. The upgrades have been only on the outlook, but once the fiscal consolidation is sustained in a few years, it's very likely that India will be upgraded. So there's a lot of room for India to grow because it's at the lowest for IG, and I think there's a lot of appetite for India bonds just because it has the story going for it, right? It has a fiscal consolidation story, reforms, moreover, very strong growth. So the sustainability of fiscal is not a major concern for investors. In terms of Indian earnings, of course, India has very similar to nominal GDP. Earnings have increased substantially, right? So the earnings themselves have follow nominal GDP, and I think nominal GDP is also quite important. That's the reason why when you compare Indian companies with Chinese companies, right, real GDP in China may be solid, but because of deflation, earnings are very weak, right? So as a result, I think India, if it continues to grow on a real and nominal basis, Indian companies will be supported, and they will be supported further once you have this broadening out of the investment cycle. So not just the Indian stock market is actually predominated by large caps and so on and so forth, right? So we need smaller firms to be able to access capital, to get liquidity, to then be able to invest, and which is where I think the next excitement will come from, is that we're going to have this broadening out the investment cycle beyond the conglomerates.
Well, let's see how it shapes up. But Trin, really appreciate you joining us on such an important day with your view. Thanks for taking the time out. That's the view from Natixis. They've been constructive on India and believes that with this current thing as well, could be constructive. Now, Aditya, come in here. How are you thinking about it from a portfolio perspective? Are you sitting on the sidelines? Does this surprise you, or do you believe this dip is a dip that you might want to take advantage of?
I'm really happy. The numbers are not as strong as expected, but this will cap the froth that was there in the market. And now this will open up opportunities not only in the broader market, but also in the PSU space as well. So you need to be very, very careful, as I said, what you want to invest in. The market could stand here and maybe correct as well 5 to 10%, because the majority is not as thumping as the market was really expecting. Of course, the market will still expect Modi to form the government per se, But I'm happy that this will open up opportunities for investors in high quality companies.
But you wouldn't buy today, right? I mean, you're saying when you're looking to buy, you're looking to buy with a bit of a lag.
Of course, over a period of next 1 or 2 months, as picture becomes more and more clearer, now the upside won't be as dramatic as we had expected after the exit polls. We could also see a short-term correction. In fact, this could be a trigger for a short-term correction in the market, after which we could resume the bull market. So we are still positive, we are still optimistic, and this could open up the opportunity for all those who are sitting on the sidelines with cash.
So you are at 301 right now as per our screen, and do remember, viewers, that channels which were showing like they were speeding ahead have now come to the same numbers. So slow and steady wins the race. You have to be right on this. So 301 is showing a clear third term for the NDA. What the street will be watching is what the BJP number is, and that you're going to have to wait for a bit. But the fact that you are seeing a third term right now, it's safe enough to say that you are seeing a third term right now. And I just want to come back to what Rahul Arora was saying, that this is politics at the end of the day. So, you know, if you need enough numbers to cross the halfway mark or a comfortable mark, and there is a 36 number of others right now, so a lot of machinations is not new to Indian politics. But having said that, Kush, I want to come to you. Aditya says he will wait 1 or 2 months to buy. My question is why? You are seeing a third term, you are seeing the markets which have, like Neeraj was saying, priced in the worst and were nervous, now coming to the conclusion that things might not be that bad. Isn't this a good ground to start, you know, taking positions?
So, Taman, let me answer this in 2 ways. Of course, you know, I'm not a political expert here. I'm looking at this as a market participant who has an eye on politics at the moment. What we saw initially was perhaps a more, you know, as you know, someone in the morning put it, a more emotional reaction to the initial numbers.
22,800 on the index.
Absolutely. And at the end of the day, if you would have said that, you know, the NDA is still coming to par with, let's say, 300, 310, and I'm saying, you know, let's say 2 months ago, right now what we saw was a lot of hype around, you know, the 350, 360 number. But a few months ago, if someone said that, you know, the NDA is still coming to par, there is going to be a third term, would you have accepted it? I think I would have. So from that perspective also, this is stability, this is, you know, sanity prevailing now. Now let me put on the technical hat. Initially we spoke of, you know, the gap filling process. If you see, whatever gap was created yesterday was filled and then some more. But what is also encouraging is the rebound that you're seeing from those levels. Market will very soon come to terms, I think it's already coming to terms with the fact that, you know, the NDA is still going to you know, form the government, the policy continuity is going to be there. From a levels perspective, I think, you know, we'd already touched, you know, key support zones on the Nifty, on the Bank Nifty. You know, they would not have mattered if the results were extremely off the mark. But I think this is still, I'd say, fairly in line. So from here on, it may not be a bad idea to perhaps take a small long trade on the Nifty, perhaps even on Bank Nifty. Volatility could still persist. You should have a stop loss in place, but perhaps a long trade from here on is not such a bad deal.
Extremely quickly. We are almost at 22,900 now, so it's at the day's high point, and that's a very sharp recovery. So if anybody who got in at that intraday low on opening would probably be looking to cutting their gains over here. So there you go. That's the chart. It's not, that's the VIX, but the Nifty, of course, at the day's high point. If we can pull that up, it should be useful for our viewers to understand where things stand. The breadth also, Zimran, has improved. Bank Nifty also is trading around 49,400, so that's not too bad. Sure, we were having our eyes on 52,000 till yesterday afternoon, but we will not complain with what we are seeing. The breadth's improved, and I think that's what we should take heart in. When Neeraj, of course, highlighted the market opening at 9:15, you had one stock that was in the green. If you look at that now, that has changed a little bit. Of course, it's only defensives that are doing well in FMCG counters, but IT and FMCG are not doing too badly in trade. Just to also look at a few other big losers, you had Adani Group stocks that had sold off quite sharply, but all those counters are 3 to 4% recovered from the day's low. Very quickly, Kush, before I go into break, Adani Enterprise, a buy at current market price for intraday, 3,400 on the stock.
Yes, and the logic is the same as we discussed for the Nifty and the NDA forming a government.
Okay, so a constructive long trade on the Nifty, Adani Enterprise. These are trades that Kush is, of course, giving out, looking at the charts for an intraday move. We'll take a break. Stay tuned, but we've got a lot on the other side, so stay with us.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
All right, it's turning into an exciting election morning. And exciting because the screen is closer than what was expected. Is there any big surprise in terms of the actual final outcome? No, not really. We now have 543 of 543 leads on the NDTV network. You're showing a clear third term for the NDA at 303. That's for the NDA. Now, for the street, the reason you're seeing so much red on the screen is that in 2019, 303 was a figure only for the BJP. So 303 for the NDA means that constitutionally, the NDA, that's the National Democratic Alliance, can form the next government, will form the next government, but the BJP by itself is very likely under the 272 mark. Having said that, we will wait for those numbers to settle. India is at 205, performing better than what most exit polls had predicted. For pollsters, this is going to be a tough morning, apart from those who are looking at a one-way sweep and thinking that the screen will look exactly like what the polls were saying. Let's go and look at what's happening in the key states, because that's where the story is. And I have to start with Uttar Pradesh. Why Uttar Pradesh? It's the most populous state in India, has 80 seats in the parliament, and in NDA leading on 40 here, which is great. But look at the India number, and this is the Samajwadi Party here, largely, which is leading that charge at 38. Now, for context, in 2014 and 2019, the NDA had a lion's share, an outsized share of the 80 seats in Uttar Pradesh. It's a politically very sensitive state, and the road to Delhi, it's said, often leads through Uttar Pradesh. And that's perhaps one chart which is making the markets uncomfortable today. I'm going to come to Maharashtra. Maharashtra was always a tough state to predict, simply because there have been so many permutations and combinations of leaders. Here, the NDA is leading at 27-28 in Maharashtra. All goes well for them. But the India alliance is not doing too badly at 18 seats. Remember, they're split versions of the Shiv Sena and the NCP on both sides of those two political formations. So Maharashtra is going to be an interesting battle to watch as well while the numbers settle. Now let me come to the key states where it was expected that the NDA would make a lot of progress in terms of their seat share and vote share. West Bengal is the big one over there, because if it was expected that after reaching a peak in the Hindi heartland, you would see some slide for the BJP and the NDA, then where do they make up? West Bengal is one of them. Most polls predicted the NDA. Some polls predicted the NDA to be ahead of the India alliance. That doesn't seem to be happening. At 19, though, it is a jump from last time for the NDA as well. So it will be seen as a positive. 24 seats to the India alliance. Actually, that's Trinamool Congress, because in West Bengal, they chose to fight outside of the India alliance. So it's a Trinamool Congress win over there. And it's, they've said that they will, if they have an opportunity, support the India alliance from outside, but they've kept their distance. So that's an important point. Odisha and Andhra Pradesh are the other two very, very interesting battles today to watch. Odisha has been a big gain for the NDA, 16 seats up. And that's bad news actually for Naveen Patnaik and the Biju Janata Dal. So this whole sort of process that we've seen or trend that we've seen of the BJP eating into vote shares of regional satraps continues with Odisha as well. Andhra Pradesh is come back for Chandrababu Naidu after being in the political wilderness at least for the last 5 years. Those NDA seats is mostly with Chandrababu Naidu, the BJP also gaining over there. But this is a Chandrababu Naidu story and he is now part of the NDA. I want to quickly look at Gujarat. I want to look at Rajasthan and I want to look at Delhi if we can. So some of those Hindi heartland states and Gujarat. Now Gujarat, if this is the final result, will be shocking, because 26 of 26 has been the NDA score in the last 2 general elections in Gujarat. 5 seats. If it's going to the India Alliance, then we'll have to really see which seats those are and where things have gone wrong for the BJP in Gujarat. Let me come to Rajasthan. They won the state elections comprehensively. It's not looking like such an easy win this time round in Rajasthan. 14 seats for the NDA, India Alliance at 10 as far as the leads we have at this point are concerned. Let me see if we can get Delhi, and I'm not sure if we have a Mumbai cut or not, but Delhi was another very interesting fight, because remember it was all about Kejriwal being in jail and unfair, etc., etc. But really, Delhi seems to be very clearly in favor of the NDA, with 1 seat perhaps going to the India Alliance. So far an interesting picture which is turning up. It for now looks like the BJP has made gains where to compensate its losses in strongholds from other areas. And we will, of course, as the rounds of voting continue or counting continue, have to see where that number is finally falling.
By the way, the recovery in the markets, so keep that in mind as well, because we have gained quite significantly from the lows of the day. And Tamanna was highlighting TDP. Look at Heritage Foods. Look at some of those politically linked stocks and you will see some upticks in some of those as well. It's just about 2% lower currently. 10% or 11% higher for Heritage Foods as we speak. Let's get in a set of special guests. A. Balasubramaniam, MD and CEO of Aditya Birla Sun Life, and Pratik Agarwal, ED of Motilal Oswal AMC, join us right now on the show. Gentlemen, thanks so much for joining in. Bala, what's your sense? Right now, the market's a bit nervous. We don't have the numbers out as yet in totality. But if it is political and policy continuity with a lower majority, is that near-term worrying for the markets or not quite?
I think more than near-term worrying, I think we'll have to look at today's fall in conjunction with yesterday's rise. We saw significant pullback in the market yesterday on the back of short covering, as well as on the exit poll outcome that was being shown. And today, of course, there is the disconnect between the exit poll outcome versus the actual numbers. Therefore, today's market reaction should be looked at from that angle. But given the fact that the results is what is showing up, I think as we move forward, one, of course, market will start looking at after the government formation, policy continuity, there will not be any doubt. In terms of expectation of growth for the overall economy and push that they are giving, I don't think will be any doubt, and that probably will be assumed it will continue for driving the growth momentum for the country. What could probably come in the way is the way there has been opinion being expressed that the Indian markets are exceedingly well, and what the kind of valuations one has to pay in certain segment of the market. And those are the debate discussions will come. Therefore, the rate of momentum in the market probably could probably take a back seat, but that doesn't mean it's taking away the buoyancy which is being built for India as a story as we move forward. I think that's not going to be something that will get derailed. Probably it's a good reason for the market also consolidate and before it takes off on the back of earnings as well as back of the growth coming back to the systems big time.
Okay. Pratik, what's your stance for somebody who's listening in right now and trying to understand what should an investor do? What would your advice be while we are in this period of uncertainty with regards to the seats? Okay, I don't think Pratik, you'll have to unmute yourself. I think you're on mute.
No, so depends if the investor is long-term or otherwise. I think the long-term stories continue to remain the same. Many of the spaces which were doing well in the markets were in line with Indian aspirations and global aspirations. those stay. If the dispensations don't change, mostly the policy direction would also remain the same. So, a dip in the market in a strongly growing economy like India almost always is but yes, like Bala was saying, one has to look at it in conjunction with yesterday. We got a large bump up yesterday. We got a dip today. We are getting a dip today. Maybe it is best to let the volatility settle and then come in. So unlike managers who compete with the index and with each other for performance, I think investors need not compete. They can sit out, let the dust settle and come in, when the thoughts can be much more rational.
In that case, Pratik, you're sitting out of the markets right now. Would you wait for a little bit of a steeper correction? I mean, of course, we don't have a correction at this stage. Before you go out and accumulate, what is the strategy at this stage?
No, typically we stay fully invested, more or less, and that is the case now as well. When markets are very strong, we thank God and sell a bit. When markets are weak, as they are today, if we have cash on the sideline, we try and nibble a bit.
Got it. Okay, I think I've lost the line there with Pradeep, but let me come to Bala right now. We look at what's happening in the markets and what the election screen is, Bala, from a very trader and the day's point of view. But the fact is that right now, the kind of investments in mutual funds means that what happens on the screen is a matter of concern or involves hard saved money for crores of Indians. So for people who are watching this and are wondering kya hone wala hai, maybe a little concerned, they have their investments in and are in mutual funds, etc. Give us that picture that at the end of the day, it's about the India story, isn't it?
Yeah, Taman, I think if you look at from mutual investors' point of view, so I would probably say they are the largest beneficiary of the Indian market doing well on the back of Indian economy doing well in the last 3 and 5 years. If you look at the inflows that started coming to the MF industries after the 2019-2020 credit market crisis, and subsequent to that, since the fall that we saw post-COVID, the significant flows came to the two period, one till 2018, and then from 2021 till date, we have seen the continuous flows coming in. And if you look at all the investors who have put money and stayed invested in the mutual fund for the last, say, 10, 15, 20, 30 years, they have made a significant amount of money on the back of just staying invested on the conviction that, yes, Indian market will do well, on the back of Indian economy continue to do well. I think that story doesn't change. But as we move forward, this 1 or 2 days of volatility is something should not bother investors from their investment outlook point of view, because India will continue to remain one of the large market to look for, which is about $5 trillion economy. When $10 trillion economy is not in doubt. Economy growing at about 8.2% is not in doubt. Economy interest rate remaining somewhat stable. Therefore, more private capex will come on the back of government funding. Nothing is going to change. Fiscal is not going to change. Of course, the political dynamics will keep on evolving. But what we have seen in the last so many number of years, policy continuity has been the biggest boon for India, irrespective of whichever the style of operating of the political party is. That's the way it has been. Therefore, from the investors' point of view, I think they have to stay convinced that, yes, they have to make investments in equity for long term. But at the same time, somebody has come only looking at the last 1 year return and say, I'll have to probably repeat the same return for the next 1 year. That probably may put them in a disappointment. But I think if they look at beyond 3 to 5 year kind of period, I think the mutual fund investors will continue to be the large beneficiary. In fact, I did some bit of math, especially when FIs were selling in India, the mutual funds investors have been the large beneficiary of the outperformance that has come in Indian market, because Indian investors have been participating in the India growth story through the mutual fund vehicle. That's something I see as a big change that Indian investors would have experienced compared to the early period, maybe about 5-6 years back.
Yeah, so that's important, isn't it? That's the big picture. I'm not sure if Prateek is still with us. Prateek, if you can hear me.
I'm there.
Yeah. Okay. So.
Yeah, I can hear you.
So you know the thing is, and this consistently has been the narrative and the fact that the India story is an ongoing story. We are the largest population in the world. We have shown grit on how to grow, and we've seen that in the last 10 years as well. As of now, what the picture is showing is policy continuity, exactly what the street wanted. Yes, politically, maybe the situation at the end of the day would be slightly different from what most people expected, but that's politically. In terms of policy decision, which is at the end of the day what the street sees, would it be fair to say nothing really has changed?
So, yes, as of now, those are the thoughts, but let us see how the portfolios get distributed. One may have to wait for that. See, India is a very intelligent set of people, very high on aspirations. So there is a potential growth that the country would do irrespective. What the leadership of the country does is to try and remove bottlenecks, that come in the way. It could be money, it could be technology, it could be raw materials, whatever roadblocks come in the way, and improve the growth quotient of the country, the potential growth of the country. If you look at the past period, beginning of the year, economists, who work with the constraints would paint one picture for the growth of the country. The end result has typically been better. Okay, so if the constraint was money, you got a new source of money, let's say from a JICA kind of a source. If it was raw material, that got sourced, and so on and so forth. Now, with whatever we are seeing,
Prateek, can I just ask you about the first line that you said, that we have to wait and see the portfolio distribution? And I found that very interesting, because that is something which has been frankly a non-event in the last 10 years. That you know who's running the PMO, you know who's running the government, and then of course ministers do their work, but who that minister is really secondary. Why do you think that portfolio distribution becomes a key trigger for the market to watch?
So the same construct can continue if whosoever comes to power comes with simple majority, at least by itself. If not, then they will have to take a few other people along with them, give them space, and the pull probably cannot be as strong, or would not be as strong as earlier is the thought.
Okay, the yields have spiked a little bit as well when the early morning trade came out. I don't know if there is a bit of a cool off there as well or no, but I think a lot of moving parts, and I think some of the answers will get known in a few hours from now. This is not a 2019 or maybe even a 2014 wherein 9:30 by 9:30:10 or 10:30 you had a clear idea of what's happening. So just want to see if we can get the yields up, but keep that at the back of the mind too. The index is now steady at about this 2% mark, so that's to be kept in mind. Prateek, the other question is, would earnings growth in any fashion get altered as a result of this? I mean, would you presume that the focus on infrastructure, capex, etc., comes off a little bit? Maybe it will have to be a bit more populist as well, considering that it is not such a runaway win as the exit polls were predicting, or as the belief was pre-election.
No, given the thought process that I understand of the currently ruling dispensation, I see no threat of that. Populist is to give somebody money without work. Otherwise, if you are spending on construction, nation building, etc., it is giving money with work. Which one do you choose? Any individual who has self-respect would choose work and be paid for it rather than be given out a dole.
Same question to you really, Bala. I mean, would you believe that there could be a change and maybe the market would believe that there will be a change? Let's go for defensives where there is more stability because the thrust on capex might come off a bit. Maybe there could be some more populism as well because we know there has been a rural stress across for the last 6-9 odd months. So any thoughts there?
I think anyway, the way I look at there will not be any kind of change in the overall policy, given the fact the overall policy framework which has been laid out in the last few years have been benefiting not just the broader economy growth coming back. It's also been improving the overall number of companies who have been benefiting out of it in terms of profitability, in terms of creating employment, and so on and so forth. So there has been a significant improvement that has happened. Therefore, just because of you want to be populist, because the vote share has, when maybe the number of seats that are winning is actually lower than what you expected, I think that will change. I think overall fiscal improvement that you are saying, I think that should continue. Maybe from a rural economy point of view, to lift the agri economy, there could be something which will be done. But again, I don't think anything that the government would have to do more populism in nature to drive the economic growth. I think they continue to focus on investment-led growth and focus on creating employment. That itself would be sufficient enough. Some of the measures that could come, which are more populistic in nature, as there has been some school of thought to provide insurance cover for people who are above 70 years age, which currently they are eligible. That is assuming scenario, something of those kind of is rolled out. The natural will come at the cost of fiscal support initially, but at the same time, over a period of time, they will get adjusted. When any trigger that you have to do, that will do good for the economy. The government has to take initiatives, which may be seen as initially in the populistic in nature, but over a period of time, it can benefit significantly. As we have seen in the case of the Jan Dhan Yojana, initially it was felt it is not a great idea, but ultimately we have seen how the benefit got accrued. Therefore, those are some of the steps which may be taken post-government formation that should not be seen as a populist from a so to speak point of view.
Okay, Bala and Prateek, really appreciate you gentlemen taking the time out and being with us today and giving us your thoughts. Thanks so much for sharing that. As we speak, well, lots of moving parts, and let's go across to Tamanna to try and gauge what the moving parts in the southern part of the country is, right, Tamanna?
Yeah, and exactly, Neeraj, and Veera is going to join me to do exactly that. So the number that we're seeing right now is 303 for the NDA and 205 for India. And that graphic is so cool, Veera. It's like you're in our studios completely. So let me start with that fact that no matter what the final result is, and maybe not as what the street expected, would it be fair to say at this point that the BJP seems to have made major headways into the southern part of the country?
Not yet. Hold on. Look, you've got to take a little time. Some of these numbers tend to sort of vary over a period of, let's say, half an hour, 45 minutes. I think around 11:30 you've got to see that. Let's just leave the southern part alone. Look at the UP numbers. That's where the reversal has happened. There seems to be a huge battle for the BJP there in UP. In Rajasthan, you can see the blue marks on that graphic of ours, right? UP, Rajasthan, these are interesting. In South, when you look at Tamil Nadu, for instance, you still see the AIADMK up. We'll have to wait for the vote shares, etc., to sort of solidify before we come out. And also when we speak about those numbers there, Tamanna, one needs to look at the BJP versus Congress and not more importantly the BJP numbers per se, because at the moment the focus is on NDA numbers that we are talking about. So let's look at the BJP's numbers per se. As per the Election Commission website, about 220 leads at the moment. So it will be very interesting to watch how this develops over the next 1 hour. Some really fascinating trends that's coming up. It does seem at the moment, the initial indication is that the scale of the victory that the exit polls had predicted isn't happening. It seems to have been a tough fight that the opposition has given into it, but how it's going to play out at the end of the day, we'll need at least another hour or two to have clear-cut answers for that.
Agreed, completely, Veera. And to point out here that what we showed was the poll of polls. Pollsters have a lot to answer for today, if these are the numbers indeed, 250 odd for the BJP as per our numbers. We're waiting for the Election Commission's final numbers. And you spoke about Uttar Pradesh, bang on, but I also want to add Maharashtra and Gujarat. Two set of states that we should look at. Maharashtra just looking like a tougher fight. Just one sec, Veera. Maharashtra looking like a tougher fight than expected. And Gujarat, if the Congress is actually going to bag some seats, then that's pointing to the bigger picture not being as close as was expected.
That's right. Maharashtra was a state of agrarian discontent that was spoken about. You had the split in the Sena, split in the NCP. Remember, the BJP per se had 23 seats in Maharashtra in 2019. It was the Sena which had 18 seats. So how much the numbers of the BJP itself is going down would be interesting. Karnataka, again, the Congress seems to be holding on to its own at the moment, at least in terms of at least having 10 seats where the Congress is 10, 11 seats where the Congress is ahead. A lot of congressmen were hoping for 10 to 12. But Maharashtra, you see that map out there, the Congress and the India Alliance, holding on to a large section. Now, it will be interesting to see the breakup on how much is the Uddhav Thackeray Sena's seats, how much is the NCP seats, how much is the Indian National Congress's seats. Largely, how much is the NCP Pawar faction seat, and largely how much is the Shiv Sena Uddhav faction seat. I think those blue numbers there are largely those.
All right, we'll get you back on in a bit when the picture is clearer, like you said, Veera. But great to see you joining us virtually in the Mumbai studio. Very, very cool. Shout out to our team that's put together this fantastic graphic. But meanwhile, let me go back to all of the action in the markets as well, which is still digesting what has happened. I would dare say there's been a recovery from the lowest point of the day, because the understanding that even with the 303, the NDA does have another term, and they will have to come to terms with perhaps a BJP not having a simple majority on its own.
It might not be great if you're a eternal bull on the street, at least for now. It's volatile in a tight range. We are swinging between deep cuts and not so deep cuts. So yeah, we are, even the VIX index is up about 15%. So no relief just yet currently. Aditya, you were constructive on some of those specialty chemical names that you had mentioned to us. None of them are selling off too sharply this morning, but anything that you're buying right now? Or you're going to wait?
So as I said, yesterday those chemical names did not go up, and the downside on a lot of those names is protected. It's sort of a value play. Still not cheap, but they're sort of a value play.
Give us two stocks that you pick up from here.
You can look at the fluorination space, companies like SRF, companies like Naveen Fluorine, or a Gujarat Fluorochem, which was included in the EV index that the NSE really launched. You can look at a company like Apcotex, which is in the specialty rubber space that is there. You can look at Deepak Nitrite. Those companies will do really well over the period of next 2 to 3 years. So our mantra was downside compression.
And you'd buy 20% of your allocation to these chemicals today. You would stagger the buying. How would you do it over if you're buying for 3 years?
Yeah. So on the chemical space, they have already taken a lot of beatings. So I will stick my neck out and say I will buy 50% right now and 50% in the second half of this year, where a lot of recovery will be seen. So these are a lot of contra plays that you really need to concentrate on, and they will provide downside compression to your portfolio. Downside protection will come from a lot of these stocks.
Kush, you talked about a Nifty trade. What about private sector banks? They didn't run up too much yesterday, but today they're selling off. I mean, HDFC is down 3%, was up 2% yesterday. Does it look like a good contra call in today's market to go long on?
HDFC?
Yeah.
Well, HDFC has always been a buy, even when it was close to those 1400 odd levels. We were suggesting a buy. I think what will happen is, between yesterday, today, all the euphoria, all the emotions, all the excitement and the nervousness, will perhaps, settle down, and the market will then, resume normal course, business as usual. And that's when these names will start to pick up again. So whatever correction we are seeing in some of these, private sector banks, this is going to act as an entry point. 200-day moving average is where the HDFC Bank stock was, struggling, is still struggling, but I think it'll take support from there and head higher. So for the year end, I think 1700 is a good target on HDFC Bank.
And SBI?
SBI, I think this dip is going to turn out to be a buying opportunity. The entire financial space is going to do well going forward. It's just that, we saw a 9-10% move, up move on SBI yesterday. A lot of that being taken off. I think I would go out and buy an SBI. As I said, maybe not today, maybe let everything settle down. Perhaps tomorrow, as I said, from when the business as usual resumes, you'd want to go out and buy the likes of SBI, PNB, Canara Bank. I think the PSU story is still here.
So now you're only buying the Nifty.
For now, I'm only buying the Nifty with a hedge and a stop loss.
What's the stop loss on the Nifty then?
Well, see, positionally, 22,200, 22,300 is a good number. That's where the support zone is.
Intraday stop?
Intraday, you'd want to keep it somewhere close to 22,500. Gives the room for volatility, and if it does actually sort of settle, and the market realizes that the government's still there and all of that is forming in place, which could be a little dicey because the BJP standalone numbers seem to be going down a little.
I think,
yeah. But if that were to happen, then 22,500 is the support zone, and on the upside you're looking at perhaps a 2,300 as 23,000.
Just 1 second, I think Aditya wants to come in.
Yeah. So with this BJP number of not a slam dunk majority, the divestment of small PSU banks will now practically be on standstill. The government will not find that kind of a majority to divest them, and one must be really very, very careful on smaller PSU banks now, which had run up in the hope of them getting divested. Somebody like an IDBI or somebody or other smaller banks. Yeah. They will not get divested now.
Sorry, I have a question, Tamanna. I have a question. Now, sorry, actually finish the point and then I have a question.
I wanted to, they had a clear majority for the last 10 years. Yeah. They didn't do it. They're not interested in doing it.
Yeah. PM Modi said in an interview to
Same
our
point.
editor-in-chief Sanjay Pugalia that क्यों देखो divestment को, profits कितना कर रही है company.
Yeah, but this was the best time to divest them when the profits are...
but they've already made money anyway. They're the biggest shareholders, so they've got bonus and dividend payouts.
The philosophy is not to sell the family silver, but to add value, which is why you're seeing that rally in all PSU companies.
But IDBI is already on the market, right?
That's true.
IDBI is already on the market.
Okay, now before we take that break, just one very quick update, Tamanna. How many rounds of voting or counting done? How many left? And could the picture be different? Materially, either side, but could the picture be materially different 3 hours from now? Very
Not
quickly.
materially.
Not materially.
Not materially. And how many rounds of counting done? There's no one figure because it depends on every seat, right? So for a larger seat, by larger I mean with more assembly constituencies in it, or a larger population or larger number of voters, there would be more rounds, and it would be lesser for a smaller
So the reason
seat.
I ask is because because a lot of messages floating around that only 2 rounds of voting done and some left. Is that just bunkum?
Could be in some seats. It's not one uniform
Not
round.
uniform thing.
Yeah, it's not.
Okay.
It's not. Everyone starts. Okay, now time for round 2, time for round 3. That's not what happens. Yeah.
Well, viewers, for all of you who are looking at that, I hope this gives you some information as well. We need to slip into a break. Come back from a break. Try and make sense of this very volatile market. Stay tuned. But it's exciting times if you're a market watcher. Really, I mean, this is great television as well. Stay tuned. We'll be right back.
Independence starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on 3 things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits and mutual funds, and self-employed women invest more in mutual funds at 17% than salaried women at 13%. How many women are investing in mutual funds?
Welcome back. It is an extremely tough market to trade, and if you're attempting this, please tread with caution. Bhavin Mehta, now VP Derivative Strategy of Daulat Capital, joins in with a technical and derivative strategy. Bhavin, it's been a bit of an anticlimax, especially after what we saw yesterday and how markets have opened this morning. Extremely volatile, very clear downward bias. The breadth is weak. Bank Nifty is trading lower. 6th of June expiry. The PCR was anyway looking not so conducive in that sense. What is the strategy to trade the Nifty? I mean, would it require bravery to initiate a fresh position on the index right now?
Yeah, good morning. Definitely today markets participants were already anticipating a volatility trade, specifically yesterday as well as today. Yesterday we have seen a sharp up move. Today markets have given off most of the gains, closed that gaps, moved lower. What I am seeing is that today till end of day, you will get clarity on the trend. However, as long as we are holding a lower levels of 22,100, 22,200, my sense is that we continue to remain in a tight band between 22,100 to 200 on the downside. And on upside, we are looking at somewhere around 23,100 as a kind of a crucial resistance zone. We need to sustain above this level for a fresh momentum. But if we break down below 22,100, 200 kind of a range, the selling could be sharp. Now, in this particular scenario, what we are particularly looking at is how volatility index behaves, and currently it is closer to around 25 kind of level. If we see a spike probably towards 30, 32, we may see a sharp sell-off in markets, but till that time markets taking a directional call would be difficult in trade today.
So no trades, but let's just try and help people who've taken trades. If you were long on the market on Friday, or rather Monday, what do you do right now? Do you take your losses? I'm guessing because you'd have no choice. There's no profit being made on any of those Monday trades. Or do you wait it out? How would you approach it? And if you were short, would you take profits? If you were an FI, who's now clearly laughing their way to the bank, guys.
Yeah, so even from FI perspective, if you look at the kind of trading position they had taken, there was a lot of volatility from the positioning perspective. So they covered good amount of short yesterday. Prior to that 2 days, they created good amount of shorts. So there was a lot of volatility even from the positioning perspective. However, my sense is that as long as FIs still continue to remain short, there is a high probability that they will look to book out in the range of 22,100, 200, unless there is a kind of a black swan event wherein current government may not come with a good amount of votes. So my sense is that going forward, the levels will be very crucial. Currently, it is at 22,500 in trade today. If that is broken once again, we can see a move closer to 22,100 to 200 on downside, and breakdown below that will be a clear sell call on the directional front. However, till the time this range continues, my sense is we will go into that narrow consolidation zone between 22,200 to 23,100. That is the view that we are looking at.
Thanks, Bhavin. Thanks for joining in today and giving us your thoughts. We'll spare you giving your stock ideas. This is a difficult market to really be giving ideas, so let's avoid that. But it's an interesting time to try and ponder over what could be.
Thank you.
Nilesh Shah, MD and CEO, Envision Capital, with us to talk about that. In a bit, we'll also get in Mr. DP Singh, DMD of SBI MF. He joins us as well. Great having you, gentlemen. Thanks so much for joining in. Nilesh, not quite what the exit polls were suggesting, and it seems to be a razor-tight match right now for the BJP to reach a number of 250, let alone 272. Does this disrupt the optimism for equity markets from a medium term? I mean, I know the long term is great, but from the medium term, the next 6 months odd, does it cap valuations? Does it cap sentiment, or not really?
No, surely, Neeraj. What we are seeing on the screen today is totally in difference to essentially what we saw on the exit polls or what was the popular opinion. Or so I think to that extent, if the numbers actually pan out the way what we are seeing on the screen right now, this will surely act as some kind of a short-term speed breaker. While I totally agree that nothing really changes from a long-term perspective in India's economic prospects, but clearly in the short term, as far as the markets go and select pockets of the markets go, this will surely act as a speed breaker.
Nilesh, hi, good morning. Tamanna here. I was just looking at what is green on the screen, and there's a lot of FMCG stocks as well, HUL, Britannia, Nestle. You could argue it's defensive play, but also is there a sense if this is what the final number looks like with the BJP 272 and sub 272 by a distance? Then the focus on rural distress increases, maybe more freebies, or you would call it more subsidies, etc. And then the focus is very squarely on bringing the rural economy up to par. And maybe that's what you're also seeing on the screen. So a bit of policy shift, if this is the final number that you have, NDA, third term, now the number at 292. But you have an NDA with a little bit of a different shift, which is not too eager to seem like they're only catering to those watching this channel or trading in the market right now or to corporates, etc. And that shift will be perceptible in policy push. That's what the street is looking at today, isn't it?
Clearly, yes, there is going to be some bit of a risk off more for the markets. There's going to be a shift towards defensives. Clearly, the best candidates for a defensive trade would be FMCG, IT, and pharma. This trio essentially will probably outperform or is best poised to outperform, at least till we have the political uncertainty kind of going down. So I clearly believe that, yes, these are some of the sectors which could do well. Particularly FMCG, I think, is a strong contender for outperformance, not just because of the risk off mode or because it's a defensive bet, but also because rural spending has already seen green shoots. Rural spending, which was kind of quiet for maybe about last 2 to 3 years, that's essentially seems to be bouncing back. So that's first, and two, there's been a cool off in crude oil prices, and that's obviously good news for FMCG because that's a key raw material, at least crude oil based products, which will drive gross margins, drive net margins, and will drive earnings. So I think right now there's a confluence of several positives for the FMCG companies and for all businesses which are oriented towards rural spending. I think two-wheelers also fall in that category. So this, I think, overall as a pack is expected to outperform at least between now and July, when we see essentially the budget for the full year, which will definitely give us a glimpse or a canvas of policy reforms and what to expect over the next few years.
Mr. Singh, good morning and thanks for joining in as well. Would you echo that we may see a different policy, because in order to form the government this time around, the support of allies is also necessary, and if the UP verdict as it stands is anything to go by, there seems to be a question mark on the capex drive, so or maybe so. So I'm just trying to understand if you think the markets would think like that.
No, good morning. First of all, yes, I partly agree with what Nilesh has said. But at the same time, the capex cycle, I don't think that will happen, because in any case, the employment generation or employment is being an issue. Is now the more employment generation has to come from private sector rather than the public sector, because the position which was taken. So the capex cycle, you specifically talked about UP, and I think that the things are going to continue the same way, because these are the elections, and it's more than sentiment. We have to talk of the arithmetic also. When SP and Congress were fighting together, and if we look the old numbers also, there was likely that there will be some surprises. Actually, The exit polls were a little surprising, but that was there. These numbers are not surprising, honestly speaking. But I think with the one thing is coming clear that NDA will form the government. It looks like as of now, but as you say, we in mutual fund we always play a long game. We never look at the short term or very medium term. So we are absolutely right. India growth story is intact. Capex will continue. And I don't think immediately after the election there's going to be a big shift in the policy that the freebies or other things will come in for. I don't think so. The major event is going to be monsoon rather than the political thing. So we are confident that we're going to continue. But these one day 2,000 points plus and the other day 1,500 minus, these are okay. These are the things which are expected in this hyper political activity. But overall, we are quite confident that we will continue to be in double-digit green zone over the period of time.
The Nifty's back at its day's low point, 700 points off on the index. A little bit of recovery that had come through has also now given way. 22,543, a 720-point cut on the index is what we are seeing. Bank Nifty looks weak. Nilesh, just before we went into this event, for the last couple of months, there's been enough and more chatter about a price correction, a time correction. We withered all those storms, to say the least. But there have been an enormous number of portfolios that have been sitting on some amount of cash or dry powder. Do you feel times like these, or maybe today, is an opportunity to upfront a little bit of that dry powder?
Maybe yes, Samina, to a small extent, but I think investors would probably be well advised to calibrate their purchases or their investments. Keep in mind that we've had an up move, which basically again factored in that the existing coalition and the existing leader of the leading party of the coalition will kind of come in with a significant majority. So obviously, of course, the maths or the arithmetic has kind of got disturbed, especially what we see right now on the screen turns out to be true. So I think to that extent, probably being a bit calibrated might be extremely useful, and that might yield better outcomes. Maybe one could use the time between now and say July, which is when you will see the budget by the new government. That period could be a period of bit of uncertainty, and I think markets don't like uncertainty, which can create downsides in the markets, and you could see downsides in different sectors at different points of time over the course of maybe the next 6 weeks. So I think one has to essentially keep these things in mind. Another thing which I would just like to bring in a historical perspective, that right now we think probably that if there is any, basically the outcome has not been in lines with which was expected, may not augur well for capital goods or not augur well for manufacturing or may not augur well for real estate. But keep in mind that if one flashes back to 2004, when of course the outcome was totally different and we saw a sharp cut. But after that, we saw the bull market continue in India. And that bull market went all the way up to January 2008. So if I were to kind of use a similar corollary to what happened then, we probably had the lows of the markets in 2001 or 2002. And after that, we had a 6 to 7 year bull run. Similarly, if we assume 2020 to be that low point for Indian markets, from there, this bull market would at least have a lot more legs than what we would imagine. And I still think that the leadership, which has been with sectors like energy, manufacturing, infrastructure, real estate, that pack may still not lose the leadership. So I think we need to keep in mind and look back at history, what happened then and what happened now. What changed in 2004 was that post-2004, PSUs as a pack underperformed. And that essentially we have to bear in mind that maybe the PSUs, which have run up so dramatically, quite meaningfully over maybe the last 2 to 3 quarters and over the last 2 to 3 years, there I think probably there might be an elongated speed breaker, provided what we see on the screen right now turns out to be true by the end of the day or by tomorrow morning.
Singh Saab, Tamanna here. Great to speak with you today. And I think today is also a day for a message for mutual fund investors and investors overall, not just those who are looking at the screen today and the markets today. Because they have put their faith in the long-term growth story of India, and that doesn't change, is it?
No, definitely. Long-term growth story remains intact, and this is the time when people have to start contributing more and more to participate in the growth story of the country. It looks like, I mean, yes, short term there will be some volatility, uncertainty, which we are talking about, but long-term story definitely continues to be unweighted, and more and more people, and actually these corrections giving the chance to the fund managers to deploy their cash or whatever money is coming in at a right kind of valuations.
Mr. Singh, another quick word from you on, would you consider rebalancing your portfolio at this stage? Maybe a market neutral strategy, move from broader market stocks to more large cap focused names?
See, it's an ongoing journey which keeps on happening every day in and day out. But definitely, when these big moves happen, that gives a better opportunities for the fund managers to rebalance their portfolio, keeping in view what is in store. So definitely, they'll be taking calls today, and not only with us but everywhere. This will be happening. These moves are definitely helping the fund managers to rebalance their portfolios. That's correct.
Okay. And Mr. Singh, just one quick follow-up. Actually, the same thing to Nilesh as well, post that. The other macro, right? There is a large dividend which might help push, I mean, keep the fiscal glide path intact. There is a JP Morgan bond inclusion due. What about a bond portfolio currently? Is it a good time also because the optimism around equities in the long term stays, but in the short term might get tempered a little bit?
Yeah. No, two parts. As far as equities are concerned, any player who is coming through mutual fund route is likely to come for a long term, and is coming through long term. That is being certified by the SIP story which is there. That continues unabated. Whatever numbers we have, every month we are adding more and more number of people joining the equity markets for long term. That stays. And now $3 billion coming every month through mutual fund route in maybe next 6 months is going to be a great stabilizer for the markets. As far as fixed income portfolio is concerned, yes, there is an opportunity. If you look at it last 2 days also, especially after the great dividend given by RBI to the government, there's definitely this thing that the deficits will come within range. And now there are so many news, JP Morgan index inclusion, as well as other global factors are definitely hinting towards that. One, our currency is going to remain stable, and second, there's more and more interest of people from outside India also to putting more and more money into the fixed income portfolios for a long run. So that is there, and that is also evident for the last 2 days. See yields cooling down, and that's something. Sooner we participate, better it will be for the investors to make more money into the fixed income portfolio.
Nilesh, do you think the focus will now very quickly move to policy on the 7th, followed by the budget? And as much as till yesterday afternoon we were talking about how FIs would be so disappointed, they missed the rally, they were sitting short, they were hedged. It seems like they might be having the last laugh in today's session. But what do you feel? What happens between now and the budget? Would you consider rejigging your portfolio at all?
Oh, absolutely, Samina. I mean, obviously, it's not going to be a major overhaul because our portfolios are a bit diversified. Yes, there would be a few sectors where we probably have larger allocations, but as we speak, we don't own any state-owned stock or any PSU stock. So to that extent, one doesn't need to change much. But yes, I think a lot of stocks which one probably had given a pass because of elevated valuations, if we essentially see softness in stock prices, we would essentially be proactively looking at them and wanting to invest into them. So I think, like what I said earlier, that some of the pillars in terms of the investment canvas remains intact, which is on one hand, the energy, the manufacturing, the infrastructure space. I still think that I continue to believe that they will continue to lead the bull charge. Then there's, of course, the steady compounders or the long-term compounders, which essentially are the financials and consumer names, which essentially continue to move on. And lastly, I think online businesses, digital businesses, niche technology services, which are more a global play, will also essentially be a part of the portfolio. So I think this broadly remains. I think the area that one has to be a bit careful about is the PSU pack. And also, I think in terms of the infrastructure and the cap goods, you probably will get more attractive entry points over maybe the course of next 4 to 6 weeks.
Okay. Gentlemen, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate both of you talking to us on this very important day. And clear view, viewers, that the long-term story, of course, stays intact. Short-term, there could be some trepidation as we've seen today. Circa lowest point of the day today for the Nifty, by the way. Maybe a buying opportunity a bit later on for today, though. I don't think too many people are talking about buying currently. Let's wait and watch as the day unfolds. But the first leg of India Market Open is done. We'll, of course, stick with this, obviously so, through the course of the day. But
let me tease what's coming next.
Yeah. No, before that, Tamanna, just the only thing that it's not just, by the way, that the PSUs are being taken to the cleaners. Since we haven't done just a market check, a lot of, yes, PSUs are down. A HAL is substantially lower. The Nifty CPSE ETF must be really cracking under pressure today. So a lot of those PSUs have corrected and corrected quite significantly, but a lot of broader end of the spectrum stocks too are reeling under significant pressure, especially the ones which had gained from the policy push. Just want to pull up ABB, for example. The Nifty CPSE ETF is down, CPSE index is down 9%. Pull up ABB India. This is a blue chip name, down about 8% in the session today. Just goes to show it's not just restricted to the PSUs, the selling today.
In the broader markets, apart from 20 stocks on the Nifty 500, everything is deeply in the red.
Yeah.
So it is, it's looking uncomfortable. And I'm guessing if stop losses are getting triggered, the losses are only going to intensify as we go along the day. And this is, I think, what we come back to when we keep talking about the importance of investing regularly in a staggered manner. Now, you want to keep this volatility out. There's no way anybody can call a market's bottom or top or call a sell or a buy. In hindsight, remember, it's Vision's 2020. But what you also want to be mindful of is taking timely profits. I mean, stocks like HAL, BDL gave investors so much opportunity to take.
Those who took profits yesterday are the ones who are sitting and watching today's election
nobody would
results
have
with
done
popcorn.
that because if the exit polls indicated such a big victory, why would you take your profit on an exit poll day, right? You'd wait for the D-Day.
Perhaps some of that, if people have had, but yeah, that big story continues. You know, you could also look at this as an opportunity to buy into the India story, which you should, frankly, beyond a point, which you should, because you had seen so much of froth coming up. But yes, the first leg of India Market Open is done. On the other side, pure politics is what we're going to focus on. What are the numbers showing us? What does it mean for policy direction? And how much of the fight is yet to go? All of that when we come back.